HomeOwnership Club session. Today is the holidays. This is why we're sending you this video. And here is some of the content that we'll be going over. And just to give you an introduction, my name is Anita Abro, and I'm here to help you learn about the process of home buying and terminology used, educating you on the process to buying a home through these series of classes and get a better understanding of the process because knowledge is power, of course. A little bit about me. I'm a loan originator. I'm sponsored by a company named Glory Mortgage, which means I help borrowers prepare for home buying by financially preparing themselves from the beginning to the end. I wanted to be a part of this club because the Wesley House has provided opportunities for me in my life, and I really wanted to give back. Our first goal for you would be for you to understand the home buying process and how to better prepare yourself. And the second goal would be for you to create your own path to becoming a homeowner. And today I'll just give you guys a brief definition of what types of loans that are available for you as a borrower. These two are the most common ones, FHA loan and conventional loan. FHA loan is insured by the Federal Housing Administration. Their mortgages are insured by the government through the Federal Housing Administration, which is part of the U.S. Department of Housing and Urban Development. It's designed for first-time home buyers and those with moderate incomes who may not qualify for conventional loans due to stricter requirements. They offer lower down payment requirements. One of the primary advantages of the FHA loan is it is lower down payment requirement typically is around 3.5% of the purchase price. FHA loans may be more lenient when it comes to credit scores, making them more accessible to borrowers with lower scores compared to a conventional loan. The lowest score within FHA is a 620. It does go down to 580, but with 580, they do require more money down than the 3.5% at purchase price. They also have something called mortgage insurance premiums, which the borrowers are required to pay upfront, and annual mortgage insurance premiums, which protect the lender in case the borrower defaults on the loan. Conventional loans. These are not guaranteed by the government. They are backed by private lenders and are subject to their requirements. They have stricter credit and income requirements. Compared to FHA loans, borrowers often need higher credit scores and lower debt to income ratios to qualify. While conventional loans generally require higher down payments than FHA loan, often 5% to 20% of the purchase price, there are options for down payments as low as 3%. Conventional loans require borrowers to put down less than 20%. On a conventional loan may be required to pay private mortgage insurance. PMI protects the lender in case of default, but can be canceled once a certain amount of equity is reached in the home. Conventional loans have higher loan limits than FHA loans, making them suitable for more expensive properties. We also have the VA loan. VA loans are available to active duty service members, reservists, members of the National Guard, and eligible surviving spouses of service members. VA loans don't have down payments. They have something called a funding fee, which supports the VA loan program. It ranges from 0.5% to 3.6% of the loan. And typically, this fee can either be paid upfront at closing or we can roll it into the mortgage loan balance. There's also USDA loan, which is a no down payment mortgage for low and moderate income home buyers in the largely rural areas. An example is some parts of Katy are considered rural areas. These are USDA loans are part of a national program created by the U.S. Department of Agriculture to help loans for first-time home buyers or people who don't meet conventional mortgage requirements. And then is a category called non-traditional loans. These loans are bank statement loans, 1099 loans, I-10 or foreign national loans. They were created to help people who don't fit into any of the traditional loan requirements listed in previous slides and have different requirements. Please look over these and send us your questions. Think about which loan do you think would best work for your financial situation, and if you have any questions so we can elaborate more without jumping down a rabbit hole, because this session is not meant for that. It's just meant for you guys to briefly get a definition of what's out there and available for you. These are different types of loans available. Knowing what is out there will help you figure out what steps you need to take to financially prepare yourself when you first reach out to a mortgage loan originator. This will be the first question mentioned. What type of loan are you looking for? And if you talk to a realtor, they're also going to ask you, well, what type of loan do you have? So, no question is a wrong question. Just being here in this class is a first step of preparing yourself. And thank you for your time.